Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Charlie Brown, Managing Director on Nasdaq Market Intelligence Desk. It's great to have you with me, as always, Charlie. And you know what? Very different story from yesterday to today. Is it a bull in a china shop?
It very well could be. Early indications were that the markets were selling off heavily in the future. They rebounded somewhat when President Trump tweeted out that he heard from China and they were coming over to make a deal. That wasn't really any new news, but optimism crept back into the market. That was also reinforced by Press Secretary Sarah Sanders, who reinforced what President Trump said. The market took a bit of a step back when the Commerce Department from China indicated that if the U.S. was ready to make tariff increases on Friday, they were going to have to look at retaliatory measures themselves. But overall, there is some optimism in the market, and we're trading in the green today.
All right, let's take a look at a couple major averages here. Let's pull up a chart of the S&P 500 and the Russell 2000. What are you taking a look at here?
Sure. So we have this chart here because of the potential of the Russell 2000. We can see that the Russell, so far from during May, has just decreased by about 1%. That's opposed to the S&P that's decreased by about 2.5%. And the Dow that's increased or decreased by about 2.8%. The potential here is, if this trade rhetoric keeps going, the companies with less exposure to China, the Russell 2000, has a great deal of room to move up. So it will probably fill that gap as the trade negotiations continue.
All right, let's also take a look at the Consumer Discretionary Index. And you guys have identified, I believe it was yesterday in the Midday update, you're seeing a reversal here, and there's a very specific pattern on this chart.
True. Consumer discretionary is probably the second best performing sector within the S&P behind information technology. It is up 30% from its December lows. It's up 21% year to date. What's interesting to see is it ended up April on a 7-week high and hit a all-time high midpoint last week. However, the week ended down. What that caused was something called a hanging man's candle. That is a bearish signal to technical traders and indicates some sort of consolidation or a downward pattern. We took a look at the RSI just to see if that was confirmed. It had hit, consumer discretionary hit the 70 mark, which says it's oversold. So it looks like it's going to come in a bit.
So based on the pattern that you're seeing here, if we get another red bar down, does that confirm what you're seeing with, with the hanging man candle?
Yes, that's exactly what that does.
All right, let's move on and wrap up here. And what are you guys looking at for the rest of the week?
Well, we have continued earnings coming through. The majority of earnings have come through so far. Earnings look good. But we also have some economic data that we're going to be watching on. But all the traders are going to be watching what happens with those trade negotiations on Thursday and Friday, and if anything happens. The bottom line is we think it's probably going to get, the can's going to get kicked down the road a little bit. Hopefully the tariffs won't be put in place, and we'll have an extension based on the current platform.
I mean, just look at every single move when we get these headlines or tweets that come out, just how sensitive the market is, because at the end of the day, there is a lot of optimism priced into this market.
Absolutely.
So I think the best case scenario, besides a resolution, would be the can kicked down the road. I'm not quite sure how it would react if tariffs were put on.
No, it wouldn't be a good thing.
All right, Charlie. Thank you so much for joining us at MarketSite.
Good to see
and
you.
Thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.